I'm Matt Bichard here at the La Quinta Resort and Club in Palm Springs, California for REITwise 2017, NAREIT's Law, Accounting, and Finance Conference. Joining me today is Adam Feuerstein, National Real Estate Tax Technical Leader with PwC. Thank you so much for joining us today.
No, my pleasure.
Now, you participated in a panel here at REITwise that was looking at some high-level tax issues impacting REITs. So I think it makes sense to start with, obviously, the biggest of them all, potential comprehensive tax reform, and what REITs, and more specifically REIT investors, should know about that.
So it's important for investors and REITs to realize there are really two buckets of things that they need to be thinking about. One is just what the direct tax impacts are. What's going to happen to REIT taxable income under tax reform? What happens to REIT distribution requirements under tax reform? What happens to the taxation of shareholders under tax reform? And that's clearly important and something that they need to focus on. The second bucket is how it's going to affect real estate generally in the real estate markets. What's going to be the impact of tax reform on the values of real estate and prices of real estate, both in total and in different geographic markets? What's going to be the impact on financing and on interest rates under tax reform? And who's going to be incentivized to own real estate after tax reform? Because all of those larger global business issues are clearly important to REITs as well. As far as the types of changes under tax reform that have been getting the most attention, one is the loss of the interest deduction. So it's certainly potential that REITs would not be able to deduct interest on a going forward basis. On the other hand, there might be immediate expensing. So REITs today have to depreciate a building usually over 27 and a half or 39 years. Now, at least the cost of a building but not land, they would be able to deduct on day one. And so that's obviously another large potential impact under tax reform. You also have potential loss of 1031, or that's something that people are concerned about. And from the shareholder level, there's really a potential change on the way they're taxed for U.S. taxable investors in particular. Under the proposal, under today's rules, they're taxed at maximum rate of 39.6%. Under the proposals, it's not clear what rate they would be taxed at. Under the House Republican blueprint, it might be either 33%, 25%, 16.5%, and there's obviously a big difference there, and that's something that REIT shareholders will want to focus on.
Now, another topic that's gotten a lot of attention lately is subsidiary REITs. What are the main tax issues there?
So subsidiary REITs have the same issues as other REITs, but there are certain pitfalls that they tend to fall into, or issues that tend to come up more often with subsidiary REITs. And one issue, actually, that is different for subsidiary REITs is preferential dividends. So subsidiary REITs, and it used to be that parent REITs were subject to those rules as well, or public REITs, but now they no longer are. And so subsidiary REITs need to be careful when they're making distributions to make sure that they don't make any distributions that are preferential distributions. But other issues come up more often with subsidiary REITs. One is informing them. You need to make sure you get the documents right as you're setting it up. You want to make sure that they're have the types of provisions that won't raise a REIT qualification issue. You don't want transferability restrictions. You want it managed by a board of directors. And then with respect to the operations of the REIT, you want to make sure that that you're satisfying the income and asset tests, and particularly on the income tests, the issue that can come up is there's usually more concentration of ownership with subsidiary REITs. You have a few shareholders that have large interests, and so as a result, you're more likely to have issues with related party rent or independent contractors, and you want to make sure that the tenants of the REIT aren't related parties and that the independent contractors qualify as independent contractors.
Adam, thank you so much for joining us.
Again, my pleasure.
For more from REITwise 2017, be sure to visit NAREITsREIT.com.